For at least the last 2 weeks and over the weekend, my head has been splitting into two. One head is telling me that diversification, rotation into stocks, rotation recovery stocks, and the other head is going focus on Tesla, Nvidia, AMD, Fiverr, concentrated portfolio. So my head is literally split into two, and today I want to showcase two different of my portfolio on why these two must be different for its own particular agenda. So stay with me in this video and I will share with you my views. Weekend just passed was my birthday weekend and I wasn't there to celebrate. I did put my phone down and read Peter Lynch's book over the weekend for the third time running. But then what's really bugging me is this split in my head. Personally, my own investment portfolio, seeing stocks losing, seeing my personal portfolio losing up to $70,000-$80,000, it doesn't really bother me because my game plan is there. But the one that's really splitting my head on the left-hand side of my head is my managed funds, my eToro, my diversified portfolio. So today I really want to showcase two of my thoughts, my two different worlds in my head, because it is completely different. So I just want to get quickly to the first one on my eToro account, okay? But the problem is I cannot just keep focusing on tax because people look at your trades month-on-month performance, and I cannot live on a negative. I need to show consistency. I need to show responsibility as somebody who manages my own portfolio, and I cannot be too selfish just to focus on concentrated stocks. So therefore, on my eToro account, I've started rotating. So today I've seen signs on the Dow Jones, good news, finally they're on the up. Okay, Dow Jones was about to rotate the last 2 weeks. I don't see signs. I can see oil rotating, but no other signs of recovery stocks. And today is all good news. Now I've seen the first white soldier last Friday, second white soldier, and the third white soldier tomorrow. If it goes up again, that's breaking the resistance, and there we go. Dow Jones will be on the run. 2021 is a recovery, and Dow Jones stocks will be on the run. The likes of the oil, Chevron, you got your banks, JP Morgan, Morgan Stanley, you've got your own travel stocks, your Carnival Cruise, your Las Vegas stocks. All the stocks will be runners. All these recovery stocks will be the ones that's going to drive Dow Jones even higher. And with the stimulus check of $1.9 trillion, it's going to help even more. And guess what? You and me, all looking forward to get out of the house. We're looking forward to travel. We're looking forward to meet friends again. We're looking forward to eat out again. We're looking forward to go to the cinemas again. So this is stuff that, honestly, personally, I think I'm ready to leave. I'm ready to get out of this desk. I want to go back to work. Have a nice job and less stress. Then you have to rotate. And this is the time to rotate. Where should you rotate? Oil should be one you think of. Me, I like the OIH, the XLE ETFs. If you're in the UK, you like more risk, the PMO. That's what I like. Total, if you're European, and Chevron. Chevron stocks are really good. So those stocks are the stocks for oil that you should go into. Service companies, Schlumberger and Halliburton. Those are service companies that are doing well. They're still undervalued. So if you want to pick some of the stocks, feel free to pick the stocks. It's a year for recovery. Regardless of the oil, companies are hoping after April, March, people are starting to spend more money to oil improvement as well. And the other group of stocks that's already been flying are the investment banking stocks. Citibanks, JP Morgan, Morgan Stanley, Goldman Sachs, Bank of America, Barclays, all the European banks. Those have looked like they're flying. They've just recently passed their almost equal top. Some American banks might have already doubled, but there's still stocks that you could get into because at the end of the day, when interest rates starts increasing, this stock starts paying dividend again, they'll all start to recover. So this stock starts running, so it's not too late to get this stocks. Personally, I like the Morgan Stanley, JP Morgan and Barclays myself because I think I see them good value just now because I focus on the value. End of the day, those are value quality stocks. Other stocks you should be looking at the travel stocks, the trip advisors, the airplanes, the airline stocks that you should look, but they're all quite high just now. They've passed their highs and the multiples are really high because they've not made a profit yet. Dangerous zone, but me, I prefer my Boeing and my Lockheed Martin. I know Lockheed Martin is defensive, but they still produce engine and airspace travel. And Boeing myself and also Airbus, those stocks are still injured. But what I like about these stocks is when this gate starts opening, the employment starts coming back. When this company starts opening up the gates, realizing they're short of staff, short of people, they start employing people back to work again. When you start employing, it means you're getting back to your old losing mode to back to your growth mode. So those industrial stocks will be winners. Employment is the key. When companies start employing people back into work, that means they're trying to generate, because there's demand stir. Hopefully I'm right. The demand stir of people wanting to go out and in, the people wanting to go back to casinos, people want to go back to cruises, airlines. The demand will start stirring it. So those will start growing. So that's why if you've got a diversified portfolio, you need to start rotating like now. Okay, you could rotate last week. For me, I didn't want to rotate last week, the week before, because there's no data to stipulate that this is the rotation. Because guess what? This is like the 6th time that the stock tried to rotate, and it's happening. And I'm confident if it goes up this whole week, it's going to just move boundaries forward. And one thing that you have to realize in this rotation stocks is don't expect this rotation stocks to start double and triple like the tech stocks that you've seen in the last few months. You're not going to expect JP Morgan to double again. You're not going to expect like Destiny to double again. Who knows? We're not sure. But over the long run, maybe. But short term, no. If you're investing for long term to diversify, yes, go for it. That's the way to go. And now for the second part where my trading 212, my FU portfolio, the portfolio that I swing and trade and growth and I buy. And it's Tesla, AMD, Nvidia, and also Fiverr. Recently, I sold Upwork to raise some cash, but I used that cash to buy my Tesla. So these are the stocks that I want to grow to hopefully help me retire. These stocks back in January were looking really high. They were up about 350 grand, just these stocks alone, okay? Comfortable, running well, and then, with this rotation stocks, with this sell-off came down, the stocks dropped about 70, 80 grand, as you can see up in this slide here. So they dropped lots of money. To be honest, I'm not bothered because this stock's gone up high enough anyway. But my intention is, once this stocks drop, I'm going to start buying more of these stocks. I'm focusing on the midterm where I want to retire in 2025, and I'm expecting Nvidia, AMD, Tesla to go at least 4x. These are growth stocks that's changing the world the way we work. Fiverr, I'm still expecting to go 3x at least in the next 3 years. So these are my goals, this is my focus. I'm not there to try to buy high and sell low. I'm focusing on the volume, because I'm still looking at the volume. If you look at this chart here, hopefully I'm in the next 5 years, hopefully I get that amount of volume, and then I can grow to a comfortable amount where I can hopefully retire. Just on the stocks alone, not other business venture in, but as the stock is one portion of my income in part of the stocks investment. So you have to make the choices. Don't follow what you think that I'm right, because things are volatile. Top 3 stocks will do well if you pick the right concentration, and if that stock just boom 10, 20, 30x, you could soon go into retirement. If you have time behind you, and if you can stomach the volatility, if you can stomach the high intensity. But then if you want investment as some side portfolio to help you grow cash on the side, the money you need, and hopefully when you retire you got additional pension, your investment, your savings, your house. If you want all that you can go when you hit 55, then diversified portfolio, diversification, the likes of Warren Buffett type investing, value investing style, it should be the one for you. So there's no right or wrong. You need to sit and decide which one is for you and which one you can stomach, because at the end of the day, you're better off sitting with cash in your hands or cash under your bed. Investing in companies that's good quality value, and don't go on this high risk and high spec anymore. It's gone. It's gone. These days are gone. All these high spec stocks, all this space travel, gene editing, all that stuff, I'm not favoring them anymore. Focus on the one that's short term that you can see changes. Okay, take a reduced amount of risk and go recovery for 2021. I hope you enjoyed this video. I hope you find it useful. Please leave a comment and any queries below on this YouTube chat channel. I'll try my best to respond to every single one of you. So if you got anything else, feel free to join my Discord channel, which is free. Or if you want to get close and chat to me one-on-one and also a bit more interaction with me, then the Patreon is where I am, and I have about 60 members who is supporting me, and we all collaborate on a very close basis to help everybody on their journey, because at the end of the day, I just want to help everyone, and this is the best way I can help everyone. Alright, so this is me now for now. Thank you very much. Thanks for listening. Thanks for your time. Take care. Bye. I hope you've enjoyed that video.
Please like the video and please subscribe to the channel.
And hope to see you soon. Bye!